In this video, we're going to use Chapter 11 homework, Problem 3, to explain the concept of calculating the initial investment. So the initial investment is going to be made up actually of three component parts. Number one, it's going to be the cost of the new machine or the new investment. And remember, it's the installed costs. It's all the costs that you're going to have to get that delivered and operating. The second component of the initial investment is the after-tax proceeds of the sale of the old machine. And the third part is any additional investment in working capital. So part 3 would mean if you needed to hire a new worker to operate the machine, or if you needed additional materials or repairs and maintenance associated with the machine, you would have to plan for that as well. So let's read homework problem number 3. Vastine Medical Inc. is considering replacing its existing computer system, which was purchased 2 years ago at a cost of $319,000. The system can be sold today for $199,000. It is being depreciated using makers in a 5-year recovery period. We'll look at the table in a moment. A new computer system will cost $504,000 to purchase and install. So that's part 1 that was given to us. Replacement of the computer system would not involve any change in net working capital. So number 3 is 0. So really all we have to do is calculate number 2, the after-tax proceeds of the sale of the old machine. So we're supposed to assume a 40% tax rate on ordinary income and capital gains. So let's look at number 2, after-tax proceeds of the sale of the old machine. So the first thing that we're going to have to do is calculate the book value on the date of sale. And our book value is going to be our cost minus our accumulated depreciation. Then in step 2, we have to calculate the gain or the loss, which is the sale price minus the book value. In the third step, we're going to calculate the tax on the gain or loss, which is going to be the gain or loss multiplied by the tax rate. And then finally, the final step in this process is we take the proceeds from the sale and either subtract the tax on a gain or add back the tax on a loss. Okay, so let's follow this through step by step, and actually your book is having us follow this through step by step. So notice the first thing that they're asking is the book value of the existing computer system. So to calculate the book value of the computer system, we're going to take the year. It's a 5-year recovery period, so we're actually going to have 6 years. I know I could have used the fill handle to copy that down. Now each year I'm going to have my cost. My cost is going to stay at $319,000. I'm going to look up my maker's percentages from the table. I actually know them by heart, but I'll look up the maker's percentages. So the cost multiplied by the maker's percentage is going to be the depreciation expense each year. Now we know that for depreciation expense, it adds each year to calculate the accumulated depreciation. And then once we have the accumulated depreciation, it's very, very easy to calculate our book value, which is just simply the cost minus the accumulated depreciation. So we were told that the machine was purchased 2 years ago, so technically we really only have to go down to year 2, but in Excel it's going to be really easy to go down the entire 6-year period. So I'm going to look up my maker's percentages, and notice for 5 years it is 6 years, because year 1 is a half of a year, and year 6 is a half of a year. So if we add 4 full years, plus 2 half years, that becomes 5 full years. So the maker's percentages, I'm going to put in my 20%, 32%. They've actually rounded. It's actually 19.2%. But I'm going to use, their 19%. I'm sorry, I said 19.2%, but we have to use their 19%. It's actually 11.52%, but we'll use 12%, 12%, and 5%, and that's fine because it's after 2 years. So to calculate our depreciation expense, all we're going to do each year is take the cost and multiply it by the maker's percentages. So my first year, it's $319,000 times 20%. Next year, $319,000 times 32%. And again, with Excel, very easy to just calculate it all the way down. So now for the accumulated depreciation, for year 1, it's just going to be $63,800. For year 2, it's going to be $63,800 plus $102,080, everything to date. For year 3, I would take the $63,800. I would add the $102,080. And then add the $60,610. So hopefully you have the pattern by now. So to calculate the accumulated depreciation for year 1, it's just year 1. So for year 1, it would just be year 1. For year 2, it would be year 1 plus year 2. For year 3, it would be year 1 plus year 2 plus year 3. So to calculate this using Excel, I'm going to type equals sum, open the parentheses, click on cell D15, type a colon, and close up the parentheses. So right now, if I copied this formula down, I would just get the same numbers in column D, because all I'm doing is telling Excel to add the cell that is one to the left of the current one. So I'm going to click in the first D15. I'm going to add the dollar signs by hitting my F4 key on my keyboard. So now I'm telling Excel to start the sum at D15 and end the sum 1 to the left of the current cell. So I'm going to hit enter, 63,800. I'm going to copy that down, and notice we depreciate a total of 319,000 over that 6-year period. So at the end, our book value is 0. So now to calculate our book value, all I'm going to do is take column B, the cost, and subtract column E, the accumulated depreciation. So we're going to take our cost, we're going to subtract our accumulated depreciation, and we've got our book value for each one of the 6-year period, and notice how it comes down to 0 at the end of the useful life. So now the first question asked us the remaining book value. So it was purchased 2 years ago, so they're talking about the book value at the end of year 2. So the number that we're looking at is our book value at the end of year 2, 153,120. Okay, now in part B, we're supposed to calculate the after-tax proceeds. So to calculate the after-tax proceeds, we have to go through steps B, C, and D. So let's go through all of those steps one by one, and I'll scroll down so you can see all of our steps B, C, and D. So for B, we're going to calculate our gain or loss. So we're going to take our sale price, we're going to subtract our book value. So in this case, in the problem, we were told that the machine can be sold today for $199,000. There it is right there, trying to highlight it, but it won't let me highlight the $199,000. So our sale price is $199,000. The yellow numbers are book value, which we know is now correct because we answered part A, 153,120. So I'm going to use Excel to calculate that number. So I'm just going to tell Excel to take 199,000, subtract 153,120, and we get 45,880, and because that is a positive number, it is a gain. If that came out to be a negative number, it would mean that we sold it for less than the book value, and we would have a loss. But because it's a positive number, it means our sale price is greater than the book value, and we have a gain. Now that we have a gain, we're going to move on to step C. So now that we know we have a gain, we don't have to do the or loss. All we're going to do is calculate the tax on the gain. So in part C, the tax on the gain is the amount of the gain multiplied by the tax rate. So in this case, I've calculated my gain as $45,880. A tax rate of 40% was given in the problem. So all I have to do is take the amount of the gain, 45,880, and multiply that by 40%. And I'm going to pay a 18352 tax on the gain. Now, notice, to calculate our after-tax proceeds, we now have to move on to Part D. So, in Part D, our after-tax proceeds, we're going to take the sale price and subtract the tax that we have to pay on the gain. Again, if that were a loss, if that 45,880 had come out to a negative number, all we would have to do is add back the tax instead of subtracting out the tax. So in this case, we're going to get $199,000 when we sell the machine, but we're going to have to pay $18352 in taxes on that sale. So we want to make sure that we have everything included, not only the sale price, but the tax on the sale. So if I take the sale price, $199,000, and subtract that tax, $18352, I come down to my after-tax proceeds, 180,648. Okay, now that we've got our after-tax proceeds, the remainder of the problem, the initial investment, is very easy because we know all of the numbers. So going back to what I typed at the beginning, we have the cost of the new machine. Now the cost of the new machine is going to be negative because we're going to have to pay that amount, excuse me. The after-tax proceeds on the sale of the new machine is going to be a positive number because we're going to get that money. And this one, for this problem, it's 0, but it's normally given, and it would be a negative number because we would have an investment. We'd have to pay more for the workers and the supplies and those things to operate the machine. So basically, we know all three of those numbers now. Number 3 is 0, so it's very, very easy to calculate that. So let me erase, let's go down, and let us finish up this problem. So scrolling down to answer the final part, Part C, the initial investment. We have the cost of the new machine. That is given to us in the problem at $319,000. I'm sorry, that's the old machine, I'm sorry. It will cost $504,000. I'm sorry, I just looked at the wrong number. The cost of the new machine is $504,000, including the installation cost. So I'm going to put in a negative $504,000. Then we have to add the after-tax proceeds of the sale of the old machine. We've just calculated that, and the computer said that we were correct at 180,648. I'm going to put that in as a positive number because that's additional money that we're going to receive. And then we have the change in working capital. And in this problem, they told us that that number is 0. So the net of the three numbers is going to be the initial investment. And it's going to wind up being a negative number because it's going to be monies that we're going to have to pay. So notice we come down to negative 323,352. Oh, it looks like it wants it as a positive number. Oh, it just wanted it as a positive number. So we have been able to solve the problem of the initial investment.